Well, talking about US indices, all three US indices saw good cuts, in fact, in trade on Tuesday, second straight day of losses for the Nasdaq, but some reversal on both the Dow and the S&P 500 that's come through versus Monday. Of course, Monday saw both of those indices gain in trade. So we've seen some of those indices take cuts, and this is largely on the back of the commentary by Wal-Mart. Of course, Wal-Mart's cut its profit commentary for the full year FY23, and that's what's really led to this particular cut in indices. We've seen the Dow down around 0.7% in trade, the S&P 500 down around 1.2%, and the Nasdaq down, of course, the hardest hit at 1.9% lower when I'm looking at it on Tuesday. However, the Dow futures are looking in the green, in fact, a third of a percent higher, so there's some recovery at play already. Which is happening on US indices. Of course, the entire focus also being on the FOMC and the Fed. But at the moment, retail is really what's stealing the show and driving the market. When I'm looking at how retail stocks did in trade yesterday, of course, Wal-Mart cutting earnings, Wal-Mart stock fell over 7.5% in trade, and it took both Kohl and Macy's along with it, 4% plus cuts on both of those. We're also looking at Amazon and Shopify both falling nearly 5+% as well. And Walmart largely suggested that consumers are cutting back on spends largely on the back of higher than expected inflation, and that commentary has really spooked investors. Industrials were the top gainers in trade yesterday, with 3M reporting better than expected results. So look out for those industrial stocks even in trade today. Moving quickly on to Europe, European indices also closed lower. Of course, the Fed meeting really spooking is what is really spooking European investors, it seems. The Stock 600 and the FTSE closed absolutely flat. The DAX was slightly lower. So that's how the European indices fared. Of course, eyes all on the Fed at the moment and how the Fed will start hiking. Where Asia is concerned, currently largely in the red. The Nikkei is probably the only index hanging on, only major index hanging on to green at the moment. Around 15 bips higher is where the Nikkei is. The Shanghai, in fact, lower 15 bips. The Hang Seng down almost 1.5+%. The ASX 200 absolutely flat, just 5 bips lower, and the Kospi down around 0.75% in early trade today. That's how Asia is playing out. SGX Nifty down 0.9% as well. So negative cues coming in from Indian indices, especially looks like a negative start, at least at the moment. Moving quickly on to commodities, oil holding up at around $95 a barrel at the moment. Brent at just below $105 a barrel. So that's where oil is at today. Mind you, the dollar index has gained. It's moved very close to that 107 mark, and that will put pressure on gold. Of course, the FOMC meeting this week and the 75 basis point rate hike also this week will not help gold prices, and gold is currently well under pressure, below that $17.15 an ounce, but still holding up quite strongly, I may call it. On bonds, of course, bond yields are going higher as the FOMC meet will see the rate go up by at least 75 to 1%, 75 bips to 1%, and that will mean that bond yields will get better. Bond yields currently at 2.82% on the other side of the 2.8% mark versus where we saw it yesterday. So that's where bond yields are. I did talk about the dollar index very close to that 107 mark, and gains around that will also continue largely on the back of increasing rates. Where cryptos are concerned, largely where we left off yesterday, around $21,000 is where Bitcoin is at. Ethereum too around that $65, $1429, my apologies, gaining around $65 at the moment. That's broadly how markets are placed before open. We're looking at probably a small cut to start off with, especially for Indian indices.